Hi, it's Charlie giving you Wednesday's video. So, how much can you expect to make from trading? And that's the question I've posed today. Because there's so much out there on the internet. I saw something on my social media flashed up promising to make people up to 10% a day, and I've had a friend, cracky, a year ago, who got involved in some service which was a Ponzi scheme, but he didn't realise. And so, what's realistic as far as returns from personal and private trading? Now, you can have some phenomenal results. I mean, that's why I've done these things like the 10k to 100k challenge, which I've completed. The 50k one will complete next summer, and again, with those sorts of challenges, like once after I'd completed and did the 1,000% return over less than 3 years, 2.5 years or so, on the 10k challenge, that's all very well, but I was risking up to 5% per trade. So you have to put it into context as far as how much you're willing to risk per trade in order to get those types of returns. And so what is more realistic? Okay, so let's go through more realistic returns with regards to trading, because I don't advocate people risking 5% per trade. That's all very well if you're doing a speculative challenge on a small trading accounts like I've done. That's one thing. But if it's your main money, your main accounts, would I recommend risking 5%? No, of course I wouldn't. We generally suggest people to risk up to 1% of their capital. I know some people do a little bit more, again, because they might risk 1.5% or 2% if they've got very small accounts. But in the main, this is what we recommend anyway. In fact, on my main accounts, I tend to only risk 0.1 and sometimes less than that, because I'm not trying to make great percentage returns per year anymore on my main accounts. In fact, I've always been very open about this, that about 20 to 30% a year is what I look for personally on my main accounts. I'm not trying to make those huge percentage returns, because once you have a bigger account, it's more difficult to make those huge percentage returns. For one, I'm only risking very small amounts here, so I wouldn't expect to make huge percentage returns if I'm only risking a small amount. But what about for those people who've got like a typical sort of account size, a couple of £1,000 up to 50,000, even 100,000 they might have in their trading account, let's say. What sort of returns can you expect? So let's actually break it down, taking this typical 1% at risk per trade figure, and then see what we can come up with here. So firstly, let's actually dissect this into, again, you've got day traders, you've got swing traders, but if we just take it and say, okay, what's realistic? So for example, would you, on 1%, people like that, coming back to that 10% per day figure. Okay, so 10% a day, it's 120% a month. Let's just call it 100% a month. So to get to 100% per month, 100% per month, what would you need to be doing? Well, it then starts to become obvious. Well, okay, so let's say you'd need to have 50 winning trades over the month. Let's say, I'm just making this up, 50 winners, no losers, at a risk reward of 1 to 2 on every trade. So on every trade, you've risked 1% and made 2%. Plus you've had 50 winners and 0 losers. That would get you to your 100% per month. Now, does that sound realistic to you? No, of course it's not. So the reality is that the only way to make 100% in a month is to come back to this level over here. So is to risk more per trade. Like I've said, when you have larger pots of money, you're not going to risk more than 1% per trade, because that would be, on large pots of money, ludicrous. People might risk 1.5–2% on a very small account, but they don't do it on large accounts. So that would be ridiculous. So Is there another way that you could get to this 100% other than increasing the risk per trade? Well, okay, if we come back to the trades themselves, well, what about if we had a risk to reward, or yeah, okay, so risking one to four on every trade? Yeah, and we wouldn't necessarily need 50 winners then. But if we had one to four on every trade, then you're going to have a lot more losers by by its very definition. A 1 to 4 risk to reward ratio will not give you a high win rate. It doesn't work that way. But that's okay. You can have, let's say there's a win rate. A really good win rate with 1 to 4 would be about 40%, I would say. Because it's natural, because a 1 to 4, obviously that means you have to hold your trades for longer. The longer you have to hold your trades, the lower the win rate. Simple as that. There's no argument in that. There's no arguing. The longer you have to hold your trade to get to a larger target, as in a 1 to 4, then the win rate will come down. And absolutely nothing with that at all. So let's now go into this a little bit more. So if we take this 40% win rate, so that means, let's say out of 10 trades, let's just bear with me here. So out of 10 trades, that means you've got 4 winners out of 10. Okay, so you've got 4 winners and 6 losers. All good so far. So 4 winners out of 10 trades, risking 1% per trade. So therefore that's 4 fours. Yep, so 16%. So you've made 16% on your winners, and then you've got 6 losers down here. And so therefore you've lost 6%, 1%. So that gives you a net 10% for the month, which is a fantastic return. So 10% in a month is a great return. But we're talking about, how do we get to this 100%? Okay, well, we've got to multiply all of this. In order to get 100% per month, this is how ridiculous it is. We've got to take these figures and say, okay, well, we can't just base this on 10 trades. We've got to have done 100 trades on these stats. That's 100 trades based on these stats in order to make 100% per month. Do you see what I mean? It just starts getting stupid, because there's not 100 trades. You can't find 100 trades with that type of risk to reward ratio. There's not that many trades out there to get 100 trades in a month. So first things first, reality wise, like I said, I saw this thing on social media and just laughed when I saw these figures, and I'm sure many of you see these sorts of things as well. The reality is that this is what you would need to be doing in order to, that's if at a 1 to 4, or you've got to have a much lower risk to reward ratio and just have almost 100% win rate in order to get to that 100%. Again, doesn't add up, does it? There's all sorts of permutations we can do. We could look at 1 to 3 ratios, 1 to 1 ratios in fact. But the reality is it's very, very difficult without just coming back to risking more per trade. But like I've said, that's then opening up another, other risks, that if you then do just go into a drawdown and have a number of losers, which any strategy can do that. So of course you could risk 5% per trade, have a nice little winning spell, and could you actually get to 100%? Yes, you can, absolutely. But the reality is that any trading strategy at some point is going to have losers. It's going to have a losing spell. So what happens? It's all very well making 100% in that month, but then if then the next month and the month after that you just go and have more losers, you'd give all of that back and more. So that's the flip side to risk. Hence why you always hear professional traders talking about risk a lot, because junior traders, people who are retail, they just think about the potential rewards and forget about the risk. So that then gets very, very speculative, which is fine for when, like I said, when you're doing a challenge and something like that, like I've done, just to prove what can be achieved. But the reality is, for most traders, on your own money, on larger money especially, you don't risk 1% even, you risk less than that. So, and to actually get to 100% per month, you can see how crazy it gets to get there. So what is more reasonable? What is more of a reality in trading returns? Okay, let's get rid of the pen here. If I can do that, there we go. The reality of trading returns is, I mean, again, it does depend on how much you're risking. A lot of our traders risk less than 1%. A lot of our traders risk 0.3 to 0.5. I mean, again, when I say a lot, we can only take what our traders tell us. Not, it's a very personal thing. But of the traders who actually say, oh yeah, I only risk 0.3 or I only risk 0.5, then we do have a number who trade at less than 1% risk. Okay, so coming back, we're going to have to use this as our base case because lots of people use less, some will risk more. But if you were risking 1% per trade, and it doesn't matter if you're day trading, because day or swing trading, it really won't make much difference. But the reality is not 100% per month. The reality is that 50% to 100% in a year is achievable. I'm not saying it's something which you're going to do. I'm saying it's achievable because 50% is around about 4% a month. Okay, so 4% a month, and that's risking 1%. And people might be watching this, especially people who may be newer to trading, thinking, well, surely you can make more than that. That is a phenomenal return because you've got to factor in losing trades. So you think, well, if I'm risking 1% to get to 4%, but you're going to have losing trades as well. So the reality is that yes, that is achievable, 50% to 100% in a year. For a lot of our traders though, a lot of them are actually happy to be making 30 to 40% a year based on the risk that they are making. But certainly you wouldn't really be looking for much more than, well, any more than 50 to 100. There is always the potential in any one year, if your strategy is having an absolute belter, that could you exceed 100%? Absolutely, you could make 200%, 300%, of course. Again, depending on, comes back to how much you're risking per trade. But I would say that this is a really, really healthy zone. And in fact, many traders won't get to 50%. They'll actually be at, like I said, down here at this sort of level when they're having a good year, and they're more than happy with that. So hopefully that gives you some food for thought there as regards to the sort of speculative returns that you hear about and might see on social media and stuff. Forget all that nonsense because it's all lies, basically. The realities of trading, and you've got to take this from my 20 odd years worth of experience now, having had all my own experiences with trading, and obviously the benefit of speaking to so many traders over that period as well, and training so many traders, that these are more the reality. Lots of traders out there are only looking to make 1 to 2% per month. 1 to 2%. And again, 1 to 2% brings them into that sort of 12% to 24% per annum. All right, I'm not compounding that, but so 12 to 24% per annum. It depends on the individual. Not everyone's trying to double their money every week or every month or every year even, because that's not what everybody who gets into trading needs to do. I understand the person who's got €1,000 or £1,000 in their trading account. They want to try and grow that as quickly as possible, and so they're going to be aggressive. But the reality is, when you've got a proper amount of money, then you won't be taking those bigger risks. You will be trading at a steadier pace, and so 50 to 100, up to, I would say, up to say probably £100,000 or so is probably about as much as you're going to get. And as your capital increases, as you're into those six figures, then generally speaking the returns come down. Why? Because it comes back to the fact that you realize you don't need to take these even 1% risk per trade. You find that you're more comfortable risking less than 1% per trade when you're trading at bigger amounts. But certainly when you're in smaller amounts, yes, these are the sort of more realistic figures for smaller accounts, up to, like I said, six figures. But once you get beyond that, it can be higher. But even that is a tremendous return. So ignore what all the marketeers and the various people might be saying to you when you see online that XYZ traders made 786% in a year. Ignore it. It's all fluff, and what? Fluff even. It's fluff, and it's not real. Get real. You have to take it from me in that I'm a FCA regulated money manager now as well. I have been on and off for years now, but I'm active in a trading fund, my fund, and even in my fund, I'm only looking to make 20% annualized gains, because you have to. Well, it's different with a fund because you have to look at your investors, and your investors, they all want upside gains, but none of them want any risk with that. So you have to try and temper the returns, because you know that the investors are never comfortable with drawdowns. It's different when you're trading your own money. You can be a bit more comfortable with drawdowns because it's your money and you know what you're doing. But hopefully that gives you a bit of a guide there, especially for some of you newer traders. And some of you new traders will say to me, "Oh no, Charlie, I've seen so and so and so and so, and they've made 1,000%." Okay, yeah. Sorry about that, but it can happen. Don't get me wrong. You take the speculative amount and you trade it speculatively. Yes, it can happen, but the reality is different to speculative returns. You have to be a bit more realistic with your what you're looking to achieve from trading. 30 to 40% in a year is phenomenal. 50% is brilliant. And if you do have the odd year where you get to 100% when you're on a smaller account, again, fantastic. And I'm basing that on 1%. So I appreciate that some people will take bigger risks and they will get to 100% or more. But I'm talking about based on this. Anyway, I've rambled on for enough this week. Hopefully that gives you some food for thought. And so I shall leave you to it. And hopefully, I'll be back on Friday for live trading.